I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
Hi, I'm JB. In this video, I will do a short update on my public portfolio and how it looks here in the new year 2022. I will show which companies I had in the last portfolio update. I will talk about what happened in 2021 and how the portfolio was impacted, which stocks I sold and why, what new companies I invested in and why, what I think will happen in 2022 and how I plan to invest in 2022. So, let's get into it. But first, please note that the last update was September 2021, where we had an almost, I think it was a 5% drop in the S&P, and a lot of stocks were hit badly back then in September, so just take it with a grain of salt. And remember, my portfolio fluctuates a lot, so all the numbers in this video are from the day of the shooting and can have changed between then and now, okay? Well, as you might have seen in the last update, I have around 20% of my net worth in public portfolio. And this portfolio is highly volatile, as my risk tolerance is kind of medium. Yes, I just said medium because, in my opinion, a high risk tolerance would be investing in some kind like crypto or really startups with no revenue, brain chip, Quantafuel, Galecto, whatever. So I'm only at a medium risk level. My total asset allocation is comprised of real estate, my 401k, Roth IRA. I have some stocks. I have some stuff like cars, bikes, boats and stuff. And finally, a little bit of cash. I never have the right size and I would like to have more, but I seem to be always fully invested. I would like to be holding at least 5% in cash at all times, well, almost all times, and maybe even a bit more, but it just never works out that way. I always have somewhere that I would like to put the money, and something is always on sale. For instance, I had very little cash back in March 2020, so I actually had to go borrow money and go leveraged just to get another, what I had, 15, 20k to buy all those great bargains back then. And these are the ones we're going to talk about in this video. I'm not very diversified, but as I mentioned before in the last update, I really don't believe in diversification. Just like Warren Buffett, Peter Lynch, Mark Cuban and others, diversification is not for me. It's not that I don't believe in diversification, it's just that I don't have that fear of crash or recession as some people have. And the stocks I'm invested in, at least my core holdings, I have researched pretty well, and I'm fairly confident that these are not gonna go down 40%, 50% and so on.
We like to put a lot of money in things that we feel strongly about, and that gets back to the diversification question. We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses.
Diversification, that's for idiots, right? Because you can't diversify enough to know what you're doing.
I don't believe in diversification at all. I would own one stock.
So I believe if you do the work and invest in what you know and what you understand, then you don't have all those problems. And of course, a timeline, and you know when you're going to use it or when you're going to need the money, so you don't just cash out at the worst possible time. I have my investments in 3 buckets to say. I have my core holdings. I have around 20% here. I don't buy for the dividends, but they're nice to have. I have the speculative bucket, what do you call it? Because you just need to have something to play around with when your other investments are just slowly compounding their way up. And like everyone else, I get easily bored, and I need to have something to do. So I have a part of my portfolio That's kind of my play money, where I can have some fun with some speculative companies and see what happens. Then I have my growth bucket. This is where I place the bulk of my investments, at least this decade, maybe even longer. I'm in the accumulation phase, so I'm okay with just investing everything I have. In this portfolio, I have 10 individual companies, and yes, you heard right, only 10. You don't need to have 50 or 100 stocks, you just need to have a few good ones. And the number is so high, I feel like 10 is high, because I still like playing around with some of the spec plays. And as I mentioned before, diversification, or as Peter Lynch calls it, diversification, is not for me. And so I'm a true believer. If you found a great company and decided to invest in it, hopefully you did that because you have done your research and found out if they were on track to make X amount of income the next Y amount of years. And combined with the number of stocks, you get an earnings per share. And with that in your mind, and have an idea of the growth rate, you know how long you're going to hold this stock. Or should I say company. And as long as the company is giving you the expected return, why would you invest in something else? Well, in my case, the only reason for investing in something else is when another company comes on my radar. Here I made a small example where you can see what three companies, just taken completely out of context, just what Ford had a net income, about, let's say, 7.6 billion, no dividend. They had about 3.98 billion shares, and the basic earnings per share is around 1.91. Bank of America had around earnings per share of 163, and then you see Nvidia. And look at the revenue, or the net income, no dividends, and still earnings per share 309. Which one would you choose? And by the way, I realized that Ford is a bad example, as I bought Ford, the Ford Motor Company, in the beginning of 2020, during the pandemic. I bought it at around 450, I think, because, this was just too good to be true. I don't like Ford as a company. I really don't like the auto industry per se. But at 450, that was a bargain. I knew that was at least 10 or 12 bucks worth. So I bought in fairly heavy, more than I usually do on the spec plays. I sold it again around a little over 8, I think. And damn, if I had held on to that, but who would have known? I would have had a 5x here. Well, this was a spec play only, as I believe Ford is going down together with the rest of the old OEMs producing ICE cars. So, let's look at the portfolio back in September 2020. I had these 10 companies in my portfolio, and as I mentioned, some of them were speculative plays, and I did not have much invested in them. The spec plays were Norwegian Air Shuttle, ticker symbol NAS. Well, this one was a complete Hail Mary. They went from around 500 bucks a share in 2019 and dropped like a stone to around 200 bucks in 2020. And wham! In May 2020, it was hit again and around 20 bucks now. So we went from 500 bucks per share to 20 bucks per share. I thought this was a great play and it could make maybe double or triple. And even though I really hate airlines, they almost never make money, always have some sort of problems. So not really something I normally invest in, but around there I did. And look at it now, it's around $1 per share. I have been buying more to lower my cost base, but at this point, I consider my money lost. I just let it ride for indefinitely, and well, it's still only 0.1% of the portfolio. Proterra, ticker symbol PTRA. Yes, another speculative play, or at least it was when I bought it. I bought it before the SPAC, or when it was a SPAC. It's still a startup, but I actually like the company and the products, and I do see Proterra becoming a good company in the long run. I just got in at the wrong time, so to say. I have been buying more and more to lower my cost basis, and I'm still down on this position, but I expect it to come back sometime in 2023, as a lot of states and other places are now mandating school buses and other transportation services to switch to electric. So this is a long-term play. I really think they're gonna make it. Air Canada, ticker symbol AC. Oh no, not another airline. Well, Air Canada was a good little company doing pretty well until they got hit back in March 2020, as the rest of the travel industry. I expected the recovery to be fairly fast, so a quick doubling or more, that was what I expected. My cost basis was around $15, I think, and I sold the entire position at around $25, so I made a nice little profit on this one. I haven't really looked what Air Canada is trading for today. Maybe I should just take a quick look and see what it's trading at. Oh, it's trading at $22.73. So, not so bad. It was a good time to sell. Next one up, Boeing. Yeah, not an airline as such, but still related. And I bought Boeing because I believed it would never be allowed to fail by the US government. So I could make a quick buck here too. Of course, I started in March 2020 like the others, and added more and more and more as it went up and down and up and down. I had an average cost around $136, and I think when it hit 225, I think ish around there, I just didn't dare holding it any longer. So I sold it and made a nice little profit on that one too. At this point, I must say this get rich quick, or at least playing the spec play strategy, actually is very stupid. Yes, I made money. Yes, it was kind of fun, but it was also very nerve-wracking at times. And looking back at the gains I got, man, I could have gotten better gains just by holding on to some of the big positions. So, lessons learned. Don't do too many of these. It's funny, but the gain is not high enough to outweigh the risk and the wrecked nerves. So, yeah, I don't think I'm going to do too many of those spec plays in the future. Okay, let's look at my portfolio and how it looks today. And again, please remember, I have some very volatile stocks, so what you see today is at the shooting of this video. Just for reference sake, I have Tesla in my portfolio, and Tesla can easily add or remove 40,000-50,000 in a few days. Stock number 10. Norwegian Air Shuttle, ticker symbol NAS, NAS. 0.1% of the portfolio, and I haven't sold that one yet. I already talked about this one, and the only reason I'm not selling is because I'm at a loss, and I don't like losing money that way, at least. It's such a small position, and they have restructured the company. They only concentrate on their core business in Europe, actually in the northern part of Europe. They have scaled down from around 156 planes to I think they have 56 now. And hopefully they will become return to profitability in 3-5 years? So I'm just going to keep this one. Stock number 9. Novo Nordisk. Ticker NVO. 0.7% of the portfolio. This is a fairly new position, and if you don't know the company, Novo is a Danish pharmaceutical company with a global reach. I think it's the 6th largest pharma biotech company and one of the leaders in obesity medicine and drugs and other lifestyle diseases. They have strong financials. They have around 20 billion in revenue and 8.56 billion in free cash flow. They have around 27 billion in the bank and only 2 billion in debt. If you look at the earnings per share for the trailing 12 months, it's around a little over $3. This company took a hit when the supply shortages forced them to adjust delivery numbers for the US. I believe this is just a short-term problem, and the company will recover. And it's a great company, so why not? It was on sale. So I started a small position and will be adding more when I can. Maybe this one is going a bit lower, but that doesn't matter. It's a company, it's strong, and it will just keep on growing for many, many years. Stock number 8, Proterra, ticker symbol PTRA, 0.7% of the portfolio. I also covered this one earlier. It's just a spec play, but still, I believe they will grow into a good company someday. So this one is a hold for now. I'm not sure I'm going to add too much more. I'm going to kind of wait until they ramp up and have some better financials, more earnings, make some more profits, and then I'm going to start adding. Stock number 7, Rio Tinto, ticker symbol RIO, 0.8% of the portfolio.
Yeah, baby, yeah!
Now we're talking. This one is a pick and shovels play. As the EV, electric vehicle revolution grows and adoption becomes more widespread, the big winners, no matter which manufacturer wins the game, is going to be the suppliers of the materials that all the EV and battery makers need. Rio Tinto is an Australian-based mining corporation. I think right now they're the second largest, behind a company called BHP, Broken Hill Proprietary. I'm sorry, I can't invest in something called Broken Hill. No, seriously. They're just a bit overvalued and management are all over the place in BHP. They're selling off their energy division and seemingly not having a clear strategy for the future. So no, even BHP has better revenue and profit right now. I believe Rio is gonna grow a lot more and overtake them in the future. And they're not as risky as some of the smaller mining companies that maybe could be 10x. It's a more secure play. Rio Tinto was founded back in 1873 and has since grown through mergers and acquisition and is now the second largest. They have around, I think, 47,000 people in 35 countries. And they're operating about, I think, 60 different mines right now. I'm going for the aluminium, lithium, nickel, and copper part. All the rest, well, that's fine, but those are the materials that I'm thinking are going to be worth a lot in the future. In 2020, they made almost 10 billion, 9.5 billion in free cash flow, and that was 6% more than 2019. They had a 21% return on capital. It's pretty good. And funny thing is, Rio is a high dividend payer too. It paid around 9% in dividend, so strong earnings, high dividend, and a price to earnings ratio, a PE, with about 6.59. That's a buy when I see one of those. I started a position and my average cost is around 62.92, I think. And I'm currently up only 3-4%. And this is going to be a 5 to 10 year position. And now I hear somebody screaming, hey, what about Albemarle? Well, everybody else is going into ALB. And I think a lot of years of growth is already priced in. So no, I'd rather go for Rio. Stock number 6, Carlsberg, ticker CARLB, 2% of the portfolio. This is another one of my core holdings, and I'll be adding when I can and when it dips. Everyone should know Carlsberg. It's a Danish brewery. It's grown into a large player on the global scene. They're the 4th largest beer company in the world, only beaten by Anheuser-Busch, Heineken, and China Resources Snow Breweries. Couldn't they have called it something a little bit easier? Carlsberg was on the right track, growing fine until 2020. Well, same story as a lot of other companies. They went on sale, at least the stock did, and of course I had to buy. Actually, I like their motto. Their company motto is, we want to make the best beer. Without thinking about immediate profit, everyone should be able to afford the best beer. In the advertising space, the catchphrase is, Carlsberg, probably the best beer in the world. I bought the stock in March 2020, which was, of course, on sale. I won't go into the financials. I did that in the previous portfolio update. My average cost is around 133, and at the time of shooting of this video, the stock price is 170, so I'm up 28% and got dividends too. I will hold this stock, forever. The only reason for selling if something really better comes along, or they stop earning, or they stop growing. Carlsberg is one of my largest customers in my day job, so I kind of like him. And I like beer too. Stock number 5, Danske Bank, ticker DNSKF. Danske Bank is around 2% of the portfolio and another core stock. This is the largest bank in Denmark and has been my bank since forever. They're one of the real innovators in the banking business, and one day they will become a powerhouse again, that's definitely. They were one of the first banks to implement mobile banking, where you can do everything with your phone. Paying online, physical stores, everywhere. Safe, secure, extremely convenient, no matter what phone you have. You can also transfer money from person to person, instantly, without any hassle, no matter what bank the other person has. And did I mention it doesn't cost anything? If you want to know more about this company, see my last portfolio update, where I go in depth on the company. My cost basis on Danske Bank is 14.62, and the price is around $17 right now, so I'm up 17%. And I also get dividends. As long as they grow, as long as they make money, as long as the story continues, I will keep holding them. Stock number 4, PepsiCo, ticker PEP. It's 2.8% of my portfolio and another core holding, and I really like them. And everyone knows Pepsi, at least I hope so. In my previous update, I went a little deeper in the financial. Here I will just say Pepsi is a stable, slow-growing company you can count on. I think it's a better investment than Coca-Cola because of their snack business. And when I look at companies to invest in, I usually look at past performance as one of the last metrics. That's always a good thing to look at. In 2020, despite the pandemic, they grew about 5% revenue, and free cash flow was around 6.5 billion. That's 15% over 2019, and mostly because of their snack sales. In 2021, Pepsi returned around 17%, or grew 17%, where Coca-Cola returned 8%. So the pandemic was better for Pepsi than Coca-Cola. My cost basis is around $135, and the price today is around $174, so I'm up around 29%. Again, another holding that I will be adding to, at least until it reaches 10% of the portfolio. Bonus info is that Pepsi will in 2022 become a dividend king. And if you know a dividend king, that's really, really rare. A dividend king is a company that has been raising dividends in 50 consecutive years. 50 consecutive years of raising dividends. This will almost certainly raise the stock price, as many dividend investors like these dividend kings. And there aren't too many of them. I think there's 31 right now. And when Pepsi will become a dividend king, they will be ranked number 9 with the 9th highest dividend yield. Stock number 2, Meta, ticker symbol FB. Yes, it's the old Facebook, just with a new name. 5.6% of the portfolio, and yeah, Facebook changed their name into Meta to support the idea of the metaverse, but come on. That was kind of stupid, but fair enough. Facebook or Meta doesn't really need any introduction. This is the growth beast, just grows and grows and grows. Revenue around 86 billion, around 33 billion in profit each year. Yes, almost $33 billion in profit every year. Free cash flow was around 24 billion, so pretty much just a cash cow. The revenue growth rate has been around 15 billion per year the last 4 years, and I expect Meta, Facebook, whatever, to remain the leader in some years to come. The only risk I see is the probability of the government breaking them up or something like that, but I don't think that's going to happen, not right now, not the next couple of years. There is one thing though, their number of monthly users is not growing as fast as it used to, and the revenue growth is not growing as much as it used to. My cost basis is around $195. The price today is $332, so I'm up 70%. Actually, in September 2021, before the small dip, I was up almost 83%. So I have been taking a beating on that one. I will hold this position until it has doubled, and when it doubles, I will take out my initial investment and invest it somewhere else. Stock number 2, Microsoft. Ticker symbol MSFT. Microsoft is 6.1% of my portfolio, and what can I say? Microsoft is just an incredible company. It has a great track record, it has a great story, and it just keeps on going. With over 143 billions in 2020 revenue and 44 billions in net income, that's over 12% growth in revenue and almost doubling in profit over 10 years, and it'll only get better. With Microsoft trying to buy some new and exciting companies and the large shift to their SaaS model, this is just a growth beast. It'll just make money forever. The money will just keep coming in. I mean, who's the competition? Yes, there are some others in cloud business, but no one has cloud, software, hardware, gaming exposure with the Xbox and the Game Pass. And now, with the acquisition of Activision Blizzard, yeah, there's no stopping Microsoft. My cost basis is $159.48, and the price today is around $310, so I'm currently up 95%. I'm gonna keep holding on Microsoft and adding when it dips a little. This is another one of my core holdings. Stock number 1, Tesla. Yeah, ticker symbol TSLA. 79% of my portfolio. Tesla is my largest position in this portfolio, and actually in probably all my portfolios, except a few of the small ones. But it's not because I have bought a lot of Tesla, it's because it just didn't start out like that. I think Tesla started out with being around 20% of my portfolio, but the growth has just been insane. Did I mention I got in at a late stage? Well, maybe I should say I was in too early. I actually bought Solar City back then and ended up being a Tesla investor when Tesla bought Solar City, and then I cashed out. And looking back, that was a huge mistake. But hey, I got back in Tesla after the Model 3 ramp was successful and the company was a little bit more secure. Elon Musk himself has been saying that they were almost going bankrupt. Actually, I don't believe that, because at that stage, anybody would lend them money. So yeah, I should have gotten in a little bit early again. But hey, Tesla is still in the beginning. I believe it can become one of the largest companies in the world. And I don't just mean market cap here. I actually mean revenue and profits. But I don't believe it's gonna 10x again. Maybe it's gonna 2-3x, which is okay. I have already gained 600%, but that's why I'm not really buying more Tesla at this point. The growth is going to be great, but a 10x? No, I don't think so. My cost basis is around $149, and the current price today is $1,049, so I'm up 603%. Tesla is a great company, but it has also been a very hard ride. But what a ride. It's been going up and down a lot of times. I have seen my portfolio lose as much as $70,000 in a week. So you really need conviction to hold on. Or actually even buy more. Every time Tesla goes below 900, I buy more, when I have cash at least. So this one is a keeper. So that's my public portfolio right now. And I'm buying a little at the moment, and will make a couple of videos explaining what I'm buying and why. But more on that in those videos. Have I learned anything in the last 6 months? Oh yeah, definitely. As I said in the last update, the old 7P principle still holds. Proper planning and preparation prevents piss poor performance. And it's really, really true. You need to have a plan for what to buy, so you're prepared and ready when there's a correction or a crash. You need to know what to buy. But it's maybe even more important to stay focused on the great companies you already are invested in and buy more of them. My mistake back at the pandemic was I was chasing a lot of those smaller and riskier stocks just to try make a little bit more money in a quick way. So those get rich quick things, it doesn't work like that. I will always remember Warren Buffett's advice. I would rather buy a wonderful company at a fair price than a fair company at a wonderful price. What does that mean? Well, what he meant was, if a great company like, for instance, Pepsi, has an annual compounded growth of almost 13% in the last 10 years, and you buy that stock, you will probably get 10 to 13% returns. If you then look at a company like IBM, which looks very cheap, but the growth rate is only around 3% a year, let's just say you get a 20% discount on the IBM stock. Would you buy IBM because it's very, very cheap and it's on sale? Or would you buy Pepsi because it's a great company, no matter what the price is at this point in time? Well, let's take a look at how that would look. Here are the numbers for 6 years. Yes, the first year it would look great for IBM because you got it on sale, and let's just say the stock price rose with those 20% the first year. So first year looks good. Second year, yeah, it's still a little bit ahead. Of course, it's simple math, 12% a year versus 23 plus 3. So already in year 3, Pepsi is ahead. In year 5, Pepsi is more ahead. And after 6 years, Pepsi would be over 38% more, even with that 20% rebate on IBM. So what does that mean? That means if it's a great business and the growth rate is great, it will perform great. That's just the way things works. So it doesn't matter if you have a mediocre company that's on sale, the great company will win in the end. It's the old story. If the company does well, stock price will follow eventually. And the great thing is you don't need to check the price every day, and you don't need to worry about short-term things and FUD and stuff and interest rates and blah, 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 blah. Just let it ride. In the long run, this is a winning strategy. So what do I believe will happen in 2022? I believe the health crisis will end this summer and will be treated just as a common flu. I think the Fed will raise interest rates, not much, just enough to stifle the inflation we have been seeing. And 2022 will be another bull market year. All the doomsday predictors will continue, and yes, eventually they will be right, but not this year. Even though a lot of stocks, especially the tech stocks, have been hit, I think they're going to rebound when we reach summer. So let's just see about that. I will continue to invest in great companies and look for other 10x companies because there's plenty of them out there. You just need to look. Please leave a like to help others find my videos and this channel. And remember, invest in yourself. This is the best investment you'll ever make. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the ninth inning. There ain't no point in resisting.